this recording to me later on so that we can send it out via the internet so that the members that are not able to attend today can catch up. This is going to be a really good session. This is our possible final webinar in our series, and that series has been presented by Duke Energy. So thank you, Duke. And this webinar today is on federal tax changes, what you need to know, and is presented by Von Lehman CPA and advisory firm. Before we get started with JP Dellmore, who I will introduce you all to after a couple of short presentations, we'd like to hear first from Kara Brooks. She is the Community Relations Manager with Duke Energy. So Kara, I'll turn it over to you first.
Great. Thank you, Brian, and good afternoon. Thanks for allowing us to be a part of today's topic on COVID-19 federal tax changes. As our states gradually begin to ease restrictions and return to a new normal, we remain committed to supporting our business customers and those in need. We know many of our customers and communities continue to feel the financial challenges brought on by the COVID-19 pandemic, and we're focused on doing what we can to help. In order to help, we've continued to waive fees for late payments and have suspended disconnections for unpaid bills. We've also remained committed to supporting our communities and have awarded over $130,000 locally in grants to assist during the pandemic. With these grants, we focused on organizations which help the elderly and the homeless, as well as healthcare workers, first responders, and schools. As an essential business, our crews have continued their work and their focus on safety. They're wearing enhanced personal protective equipment in many cases and practicing social distancing as recommended by the CDC. Please remember to avoid approaching our crews and their work sites for their safety and yours. We know how much our customers depend on us to provide the reliable energy they need every day, but especially during these uncertain times. We will continue to deliver on our commitment to our customers and support our communities throughout this crisis. On an exciting note, and specific to many of our audience today, we're happy to debut new enhancements for the Duke Energy Builders Portal and app. If you've not seen this portal yet, it's designed to help improve the quality of our service, making project management for builders and developers easier and more consistent. Now you have the tools to get your power turned on and your projects underway right at your fingertips. The Builder Portal and Builder app is the first step in bringing information and interaction with Duke Energy literally in the palm of builders and developers' hands. These capabilities will continue to grow and change over time as we incorporate users' feedback and build out additional functions to serve you. As you can see in the slide, features such as work order status, direct contact information, online service requests, and uploading large files are just a few capabilities of this website and application. To register, please go to builders.duke-energy.com. Complete your registration by responding to the link in the email you receive in response. No need to register twice. You just log into the Builder Portal or app with the same information and you're ready to go. In addition to the Builders Portal, Duke Energy values products like lighting and has been the premier outdoor lighting provider in our region for over 70 years. Our product selection offers premium quality products that meet utility industry standards and rigorous technical and safety specs for fixtures and poles. We offer financial flexibility through payment options and ask for little to no upfront capital. You are only responsible for one low monthly cost. Also, we cover maintenance. With Duke Energy lease lighting, all maintenance and repairs are included. If interested or for more information, please contact Mitch Eberens at mitch.eberens@duke-energy.com. In closing, we at Duke Energy are here to support you and our growing community's current and future needs. and look forward to transforming our customers' experience to create a smarter energy future. Thank you.
Thank you very much, Kara. Now, before we get started, I want to ask Giovanna Kraczewski, manager and CPA with Von Lehman CPA and Advisory Firm, to give a brief presentation. Giovanna?
Thanks, Brian. Von Lehman CPA and Advisory Firm is proud to partner with Building Industry Association of Northern Kentucky for this event. Like Brian said, my name is Giovanna Kraczewski, and I am an audit manager here at Von Lehman. Additionally, I also serve on the Emerging Leaders Committee for the BIA. For those of you who aren't familiar with Von Lehman, we're headquartered in Greater Cincinnati and are amongst the largest accounting firms in the U.S. with 130 employees. In addition to traditional tax and audit services, we also provide a wide range of services that many contractors need, such as HR consulting, mergers and acquisitions, business valuation, succession planning, state and local tax, among others. We are proud to serve over 120 construction clients, some of which might be in attendance today. We thank you for your contributions to our community and hope to work with many of you in the future. The last couple of months have been a time of rapid change across all industries. At Von Lehman, we're doing everything we can to ensure business continuity and the safety of our employees, clients, our families, and communities. If you visit our website, vlcpa.com, you will notice our COVID-19 Resource Center. We have subject matter experts who are updating this information in real time as news breaks and laws change that could impact you and your business. Please continue to check in for the most up-to-date information. I also invite you to take advantage of the free programming that we have to offer discussing COVID-related issues and other top-of-mind topics within all industries. These events can all be found on our website, again, which is vlcpa.com. And now I would turn it back to you, Brian.
Thank you, Giovanna. So in order to move forward, I'll introduce J.P. Dellmore. J.P. is an Assistant Vice President for Government Affairs at the National Association of Home Builders. J.P.'s legislative focus is tax policy. He has worked for NHB since August of 2003. Prior to joining NHB, J.P. spent nearly 5 years on Capitol Hill and also served as the Deputy Director of the Governor of Pennsylvania's Washington office. J.P. grew up outside of Cleveland, Ohio. We won't hold that against him. But he's got even a worse strike against him because he happened to graduate from the University of Michigan, of all places, with degrees in international relations and German literature. So without further ado, JP, I will turn it over to you. The floor is yours, sir.
Thanks, Brian. Good afternoon, everyone. Thanks for having me on today to spend a bit of your afternoon talking about tax issues. Some might think we're crazy, but I disagree with them all. Tax is always an exciting topic. So we're going to roll through this, and I encourage and invite your questions as we go along. You can put them in the chat box or take them up as they kind of fit into the presentation. I do have my disclaimer up there. As always, we work really hard to present you with accurate information, but how to actually apply these things to your specific business situation, we recommend that you consult with a tax professional to figure out how it works for you. We happen to be sponsored by Von Lehman and the CPA firm, so there's a natural nexus right there, which I don't often get, so that's pretty cool. This is the structure and how I want to walk through these provisions with you guys today. What we're going to do is we're going to take a look at the major COVID-19 tax relief measures that have been enacted so far. I'm going to start with the individual provisions, and then we're going to look at the business provisions. Some of these are pretty well known, so I'm just going to skim over them, and rather I'm going to use your questions to determine where I should dive deeper. So from that standpoint, really, please don't hesitate to answer any questions. And then just so you know, the last slide has my contact information, my email, my phone number. So if you happen to be watching a recording or you think of something later that you wanted to ask me, please just give me a call or shoot me an email. I'm happy to answer whatever we can for you. So in addition to what Congress has already done, I thought it would be kind of fun. I'm going to pull out my magic 8-ball, sort of. It's actually sitting on my office desk. I don't have it here, but I guess my head's my magic 8-ball. And what I'm going to do is I'm going to give you guys a sense of what future relief provisions we might see. The House has already passed another relief package, the $3 trillion HEROES Act. That particular bill isn't going anywhere. It was a party line vote, but elements of it might go somewhere into the next package. At this point, the ball's in the Senate's court, and we do expect the Senate to pick up that ball sometime, start working on that after the 4th of July period. So while the House has put together this $3 trillion bill, Senator McConnell has said he wants something closer to $1 trillion. But more recently, the White House has said $2 trillion is sort of what they're looking at. But that's part of the reason why I'm using this, my magic 8-ball, is because there is a great deal of uncertainty of exactly how this next relief package will come together. So it's a bit of an educated guessing game, but I just wanted to give you a sense of some of the things that are being talked about. So we're talking about what Congress has done, and also to the extent it's relevant, I've worked in some of the Treasury actions. The Treasury Department has used its regulatory authority to offer relief where possible as well. So we're going to cover 3 individual components, and then I'll stop if we have any questions on these slides. And the first one I mentioned, the IRS. The IRS really got out of the box very early, recognizing the need for relief, and they did it largely by extending filing deadlines. Over the course of the last few weeks and months, the IRS has steadily increased the scope of what deadlines are being delayed to include almost everything that is due between April 15th and July 15th. And it's all then moved to the new deadline of July 15th. One of the notable exceptions is employer-paid payroll taxes. It's Congress's provide its own relief there, and I'll talk a little bit about that as we move forward. But if you are wondering about the potential for additional delays, particularly if you happen to owe the IRS money and you're kind of putting off paying that, I would. Secretary Mnuchin has been pretty clear in his public statements that he does not intend to extend these deadlines past July 15th. So anticipate that, for the most part, that July 15th deadline is going to hold. And the centerpiece of the relief packages, it's the one thing everyone knows about, the $1,200 checks, the recovery rebates. I'm not going to spend a lot of time here because I think they're well known, and at this point, the vast majority of these checks have gone out. But I thought it would be useful to bring out my magic 8-ball for the first time and talk a little bit about the potential for a second round of checks. A lot of people are talking about it. The House Democrats' HEROES bill did propose a second round with some differences. The differences involved the treatment of children and other dependents. In the first round, children got $500 per head, and the House Democrat bill would have for a second round give them the full $1,200. In addition to expanding the eligibility for older children and for more dependents. I kind of struggle with this one. So I use one of my favorite magic 8-ball phrases, ask again later. There's a real ebb and flow going on about support for another round of checks. It's generally been stronger with Democrats than with Republicans, but not always. Even today, there's been some statements out of the White House suggesting that they are looking seriously at another round of checks. I can see this being very much a part of a future bipartisan deal. I just struggle to predict how likely it is. So the best I can tell you is under serious consideration, and it's just going to be a a question of how it fits into whatever they put together in the next couple of weeks. And then the final individual provision I wanted to cover, and some of this is a bit of a reminder for folks who may have heard about these provisions when they were enacted. It's been a couple of months that these relief provisions are out there for you. One of them is penalty-free early access to retirement account funds. If you need to withdraw money due to a COVID-19 related purpose, you can withdraw up to $100,000 from your retirement account penalty-free. So that is a provision that is out there and available for folks. So that kind of wraps up the individual side. If anyone has any questions or wants me to dive deeper into any of those, please let me know. I won't be shocked or disappointed if there aren't, because these are pretty straightforward provisions, and I think most folks are fairly familiar with them. So while I stall for a second to see if any questions come up, I'm going to shift into the business side of this presentation. We're going to look at specifically at 5 different tax provisions, starting with the medical and sick leave credits. It's beyond the scope of this to get into the labor side component of this, but what I'm talking about here is the new requirement for this year that businesses with 500 and fewer employees, that they provide medical and sick leave to their employees for if their employees are impacted by COVID-19. What I want to focus on are the tax components of this, and in particular, the way it's structured is that if you are obligated as an employer to pay out this medical or sick leave, the tax credits are designed to fully cover the compensation that you're required to pay. So businesses can claim a tax credit that fully offsets all the wages, including employer-paid health insurance costs, including Medicare taxes that you have to pay out under this mandate. In addition, the wages you pay as an employer are not subject to the employer side of Social Security taxes. And the way this credit is claimed is against your payroll taxes. Congress did this several times in the relief measures, so we're going to talk about this payroll tax issue again in a moment. But essentially, the way it's designed is instead of paying your payroll taxes, as you do that calculation, you'll be able to take the credit against money that you would have been sending in to the Treasury Department. The reality is most businesses who end up dealing with these credits are going to find that their credit amounts exceed their payroll taxes owed. Fortunately, Congress created a mechanism to deal with that. These credits are fully refundable. So to the extent you have more credits in a particular quarter than you have payroll taxes owed, there is a mechanism to get an advance refund of those credits. The IRS has a new form out there. It's Form 7200. You can actually submit multiple Form 7200s throughout a quarter as credits accrue, and you'll be able to get a check back from the IRS to cover the costs associated with this. I'm going to make a very unusual thing for me, which is a pitch for the IRS. They've actually done a tremendous job, in my opinion, at getting information out about all of these provisions I'm going to talk about. They've set up a separate webpage, irs.gov/coronavirus, and it has some really helpful, easy to understand, detailed FAQs. They're updating them frequently. They actually updated a bunch of stuff yesterday. So if you're looking for some specific questions, the IRS webpage, again, irs.gov/coronavirus, it's actually really good. But I think a lot of people are asking the question is, this current mandate for the medical and sick leave that expires at the end of this year, What's the likelihood that it might be extended? The House Democrats have proposed in that HEROES Act I've been talking about extending the mandate through the end of next year. My feeling is that Republicans are likely to fight that tooth and nail. So I don't think we should count on that at all. What I do see as a potential scenario is if the Democrats sweep the elections in November, then I could see this as being something that at that point does get extended. But for right now, I think this will go away at the end of 2020, barring that electoral event. I think one of the important credits to spend a little time on, both because it's been overlooked. There's really clear data that not a lot of businesses have been using the employee retention credits. I think there's some good reasons for that. We'll get into that. But I also think it's useful to be aware of this provision because there's a high likelihood that it's going to be tweaked and modified in a way that's going to make it more user-friendly. I'm optimistic that that's going to occur. But before I get ahead of myself, let's talk about how this credit's structured and who it's intended to help. So this is really a tool for businesses struggling due to either a government-ordered closure or a significant drop in revenue. One of the things that we spent a lot of time on in the early weeks was to ensure that all of you could continue building. We were extremely successful. There were a handful of states and localities that went the other direction. As far as I'm aware, Kentucky largely allowed you guys to continue to conduct your businesses. So the government shutdown component of this isn't necessarily super helpful. But the other side of this coin involves a drop in revenue, and that might be affecting some of you. And of course, for affiliated members, folks who are not directly in the building trades, they may have been subject to a government shutdown. So this is really an alternative to the PPP loan. That's one of the reasons it's been unpopular. People have preferred the PPP loan. I get that. I understand why. And if you have or will take out a PPP loan, you can't use the employee retention credit. What the credit is equal to 50% of the qualified wages you pay an employee if you qualify for this credit. I'll get to what you have to do to qualify for it. The maximum wages eligible for the credit, which wages does include employer-paid health insurance benefits, is $10,000 per employee. So you get a 50% credit of that $10,000 in wages. Now to be eligible, kind of touched a little bit on this, your business has to fit one of two scenarios. The first scenario is it had been fully or partially suspended during part of a calendar quarter due to government orders. The other is a drop in gross receipts, which is defined as a 50% decline in gross receipts when you compare it to the same quarter of 2019. If you're trigger eligibility on either of them, you are eligible to claim this credit. There are some other assorted rules based on the size of your business, whether you have more than 100 employees or not. I'm not going to dive into that minutia at the moment. If you have questions about it, we can. But this credit is also refundable and claimed against your payroll taxes. So just like the sick leave and family medical leave credits, you're going to claim it against payroll taxes. And if your credits exceed your payroll taxes, you use that form, IRS Form 7200, to claim the credit. So I spend a little more time in this, even though it's not a particularly popular and perhaps for many of you useful credit, because there does seem to be a growing consensus to revise how this credit is set up, in which case you may find yourself eligible for it. I think that there's a strong possibility that in the next relief package, Congress includes a souped-up version of this credit. And some of the things that are being discussed is a larger credit, which is always good, more is good, but that trigger at a 50% revenue decline, there's looking at creating sort of a tiered approach. So if you have a revenue decline but not 50%, you would qualify for a partial credit in this sense on a sliding scale. I think that would be really helpful on that front. And there is definitely interest in revisiting the prohibition between taking out a PPP loan and claiming this credit. I think that there is a recognition that the economic fallout of this has been deeper and lasted longer than when Congress created this credit back in March. None of us would have anticipated what we've gone through these last few months. So I can see them relaxing with some safeguards the requirement so that you can take out a PPP loan and claim these credits. So keep an eye out for that. I put all updates related to this stuff on our NAHB blog, nhbnow.com. So you can follow it there. We'll also get the word out as we normally do. But I think there's some potential if Congress does this right of rejiggering this employee retention credit, making it into something that's more useful and something that a lot of folks will be able to take advantage of. Then moving along, I had mentioned at the top some of the IRS actions, and one of the notable exceptions was on payroll taxes. Congress has provided some relief here, and in the last couple of weeks, they have tweaked this. What this is businesses and self-employed individuals are able to, should they choose, defer payment of the employer share of their Social Security payments. This is, I think of this as an interest-free loan. It's not a tax holiday. You have to pay it back eventually. But it is a great way of conserving cash in the meantime. The delay applies to the employer portion of Social Security taxes paid between March 27th and the end of this year. And the payback schedule is actually quite generous. Half of the deferred amount is due December 31st, 2021, so a year from, more than a year from now. And then the remaining balance is due December 31st, 2022. So you have a considerable amount of time to pay back this amount. Now, originally, when this was enacted by Congress, they again linked it to the PPP program and said if you have a PPP loan and you have that loan forgiven, you're not eligible for the payroll tax delay. About 2 weeks ago, Congress reversed that. And this legislation has been signed into law, so now businesses who have a PPP loan forgiven, I say that a bunch of times, well, really gets to you, that they can now take advantage of this payroll tax delay. So if you were originally told that you weren't eligible for this, that was correct, but it's not correct as of about 2 weeks ago. You can take advantage of this, so something to consider if it's a useful tool to conserve cash for you. And then kind of where we come to the bottom of these, net operating losses. One of the changes Congress made during tax reform was to tighten some of the rules related to claiming a net operating loss. With tax reform, Congress eliminated the 2-year carryback. They changed it to an unlimited number of years to carry it forward. And Congress also limited the amount of NOLs you could claim in any year to 80% of your taxable income. And to offer some relief in this space, what Congress did was to relax temporarily these rules. First, NOLs from 2018, 2019, and 2020 can be carried back for 5 years from the date they were incurred. Second, that 80% limit is suspended for those same years. So you can actually offset all of your business's taxable income as a result of that change. It is important to keep in mind that the old rules return for net operating losses earned in 2021. So this is a short-lived provision, but again, it's designed if you happen to have had NOLs that you were carrying forward, or you have accrued some this year. It's designed to put cash back in your business's pocket. And you can kind of see that as the theme through much of what Congress has done. It was designed to either put money in your pocket or keep the money you have already in your pocket. One of the two tends to be how they approached it. We don't see a lot of home builders having major NOLs for this year, but I think on the commercial and multifamily side, that there definitely is going to be some folks due to rent issues who are going to benefit from this provision. And then just to kind of look ahead of any other future changes, this has been an interesting provision because it got controversial after it was passed. In my view, due to a misguided and wrong view of how this provision affected certain higher income taxpayers. And the Democrats have actually proposed in the House to scale back the NOL provisions to actually reverse the changes retroactively, particularly for pass-throughs. That would be really bad for real estate, since most of our members are organized as a pass-through, which is the most common structure. The good news is I don't see Congress making retroactive changes here, but I will say that in the future, it's going to make it much harder politically to get NOL relief when we have a future economic downturn. I think that's a shame. And then the last provision to touch on involves business interest deduction limits. This again goes back to tax reform. Congress put some limits on the ability of businesses to deduct their business interest expenses. We fought very hard and won an exemption in tax reform for real estate. So if you are availing yourself of that exemption, that's excellent, and you won't care about this provision at all because it won't affect you. But if you opted out of the exemption, and there's reasons you might, particularly if you're a multifamily property owner, then this relaxing of these rules is a helpful change on that front. And I thought it would be helpful to end by noting some of the other potential changes. Again, busting out my magic 8-ball here. The top of my list is something that the IRS received a lot of criticism for, which is its decision to disallow businesses whose PPP loan is forgiven from deducting expenses paid for with that forgiven loan. The IRS argued that since the loan is not taxable income, basically free money, businesses traditionally cannot deduct expenses paid for with tax-free money. That's what the IRS said. Well, a couple of people have disagreed with them, and they're in a position to do something about it. The House Ways and Means Committee chairman, which is the tax rating committee for the House, Richie Neal, he's a Democrat. The Finance Committee in the Senate, which is the tax rating committee in the U.S. Senate, Chuck Grassley, who's the chairman there, he's a Republican, and his ranking member, the top Democrat, Ron Wyden, have all jointly criticized the IRS's interpretation here. Bipartisan legislation has been introduced. I think there's a really good chance that Congress is going to change or overrule the IRS's interpretation here, and that businesses will be able to double dip, meaning they will be able to get a tax-free loan forgiveness and deduction of the expenses paid for with that forgiven loan. So that's something we're going to be following very closely, because for a lot of our members, that would be a really helpful change. Another idea that's floated out there, talked about a little bit publicly. It's talked about a lot more behind the scenes, is the idea of creating a tax credit or some type of incentive for retrofits due to COVID-19, which could include everything from changing elements within your office space or a multifamily building to help protect people moving through from possible exposure to possibly even including the costs associated with PPE. So I think this has a chance. Again, we'll just have to see how the final deal comes together. The president, he's been pushing a few things. The payroll tax holiday kind of comes and goes in terms of their focus on it. So I'm not talking about the delay in payroll taxes. This is an actual you don't have to pay your payroll taxes deal. The reality is Democrats hate the idea and Republicans kind of do too. There's just not really support for it. There's no enthusiasm in Congress, and it just kind of lands with a thud. I don't see it happening. It could always come forward in a deal if the White House pushes hard enough for it, but it doesn't seem like that's going to happen. Another thing that the president has talked a lot about is some sort of capital gain incentive. I don't see that happening either. In fact, the Treasury Secretary more recently has said it's not necessary anymore, that the economy has rebooted quick enough that this isn't a necessary tool. And then lastly, one of the things that gets talked about, or I guess second to last, is the capital gains tax cut. I don't see that. I just talked about that one. No, sorry, I'm losing track. Apologies. The second to last one I want to talk about is a broader change to expensing. There has been some discussion of adding to the already robust expensing provisions to encourage businesses to expand and renew and invest in their business. This is more a recovery type piece. I don't see that happening either. Again, if anything happening on expensing, I think it's going to be related to retrofits for COVID-19. And then the last thing I wanted to mention, because it's a very legitimate concern and it comes up quite a bit, is that the higher unemployment insurance benefits that are being paid out in some cases have created a disincentive for workers to return back to the workforce. And particularly for an industry like ours, we spend a lot of time talking to folks virtually as we are these days, but reminding them that we're hiring. Yes, we have a huge unemployment number right now, but our members are hiring. And so this concept emerged. I think it's really intriguing, getting a lot of support to create a return to work bonus. Not exactly sure how it would work, but basically you would get as a cash payment some of that additional unemployment insurance if you go and take a job. So I think something like that is a smart idea, and we'll see how this final package comes together. So with that, I'm happy to answer any questions or talk about any of the politics going on. We can expand that a little broader, and there's my promised contact information. So right now that number rings to, that's my desk number, but it rings to my cell phone, so you can definitely find me there. Now, I see Mike has raised one question. As we get closer to the election, do you see the Ds passing anything that can be perceived as helping the current administration? Well, that's a loaded question. Yes, I do, because I think that there's a tremendous amount of pressure on Congress to continue to respond responsibly to what's happening with the economic circumstances. I think that window is closing. And I think that where we are now is after the 4th of July, there's going to be, I think it's a 4-week window before the August recess. And that's when we anticipate this next relief package to be negotiated. If those negotiations fail, I don't think we're going to see anything else this year, or at least until after the election. And that's where I think the politics, Mike, will come into play. Particularly is once that August break starts, the political conventions are going to start. So the campaign will be in full swing. It's already at like 90% swing in the virtual world we're in. But there's also some interesting potential. You know, the House is moving an infrastructure bill. The White House has talked a lot about infrastructure. The president wants an infrastructure bill. They are very far apart on how they envision infrastructure, but could a deal be reached as part of an economic recovery mechanism through infrastructure? It could be. I'm not going to bet on it, and I think it's unlikely, but there's some things floating out there.
So if anybody has any other questions, if they could please type them into the chat box or push in the upper left corner their hand raise button. Well, seeing no more, it must meant that you did a good job, JP. And I wanted to also thank you for working virtually. Lobbying virtually is going to be a new trick for you. And as I know, in talking to Jim Tobin, you haven't had a chance to get over to the Hill at all. And given the way that things are out on the streets of Washington, D.C., it may be a little bit longer before you're able to make it back over. But thank you for your hard work, a lot of success in what you've been able to do in order to help support our industry. And we owe, as you